One of the sins of trading that we come across over and over again is the idea of a trading system without context. Now, this is a big sin. For a lot of years, I was successful as a trader, but I was successful at following others. I was successful at getting in a trade, but not necessarily knowing when to get out, when I was wrong. And even though I had a trading system, I got frustrated by the fact that the system seemed to fail over and over again. It seemed fail more than I thought was reasonable, and tried to figure out what that was. And I spent some time, called and contacted a number of professional traders and asked if can I just come and sit and just watch what you do? And you don't have to tell me anything. I just watch and see what I can find. And something that I found interesting in all of those scenarios was that they had a way to wrap context around markets to describe the behavior that they were seeing that in all other accounts seemed somewhat irrational. But when you put the context around it, it became very rational and it became understandable. So, for example, today I want to look at this chart here. This is NASDAQ futures, and this is from the Brexit vote where Britain left the EU. That goes all the way back to June up till today. And I want to just describe how having context helps you see what your trading system will not see. And for example, there is a common trading system that says I want to trade a MACD crossover. So this is a MACD. This is moving average convergence divergence. What it tries to look at is it looks at moving averages on a number of different time frames. And it says, okay, if these cross, then there is an opportunity for an entry there, and I would stay in the trade until it crosses in the opposite direction. Or if these are wide apart, there's an opportunity. So I just want to look just simply at the trades that would trigger on the NASDAQ given MACD crossovers from the Brexit vote. So you had one right here. Right after the Brexit vote, there was a MACD crossover, so this is a trigger to get long the trade. And it took you all the way up till here to exit the trade. Now, so that represents, from where it triggers and gets you in, that's at 41.69. That triggers back here at 43.99. So you're looking at 230 points. That's a great trade in NASDAQ. So each point's $20 a contract, so you can do the math. Now, let's look the other way, because one of the beautiful things about futures is that you can trade them both ways. You can buy it or you can sell it. So now you're long, you're looking to exit the trade, or maybe even to go short. So you had this entry that was traded here at 43.99, and then it never really dips. Maybe 43.85 before it crosses back over, and then that crossover would have been your stop. So there's a loss there, okay? And then it crosses back here at 44.33, which you could then ride till the next cross, which was here at 43.70, so 44.30, 43.70, so decent trade there. Okay, let's look at the next one. This gets you in, and if you stay as long as there's no cross, you stay in the trade. See, this works awesome. So this is why people use a system like this to enter. They can simply trade off the crossovers and define the risk. Now, here's where it gets interesting. Notice from 45.56, every time you don't really get a sell signal, because a sell signal you'd want below, or buy signal you'd want below this line. So until then, you're looking for sells. Okay, notice that we move from that last cross, 45.70, to where we are, 300 points now. We got crossovers, but they're all wrong. So this one doesn't work. This one doesn't work. This one doesn't work. This one barely works a little bit before you get stopped out flat if you had flat stops on it. This one barely works a little bit, and then you get stopped. Like if you play the entry and exit based on the crossovers, you'd get stopped out. Okay, so why is it that even though this gives a valid entry, it doesn't work? And sometimes it does. So the fact is sometimes it does, and that gives lots of confidence in a system, except for then when you have periods like this, which have basically been the last 3 weeks, when it's not, and it's very frustrating. So what's there to do around that? Well, that's where the findings from being around these pro traders open the door for me to add context around it. And this is one of the sins, is that traders don't add context. They look at just a chart and a system like that of buying and selling based on something like a MACD crossover, and they don't add another layer of context. And what do I mean by context? That's something described by looking here. Now, this is the exact same chart. It's a 180-day, 2-hour candle chart. However, this chart has the addition of something called volume profile. And what volume profile is, volume profile says not just what prices have we traded, but how much volume have we traded at a price. So if we look, for example, on this week here, the wider this histogram is, the more volume was traded at that price. Now this is significant. People say all the time, price, 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 price. And price means everything. Actually, price doesn't. And here's an example. Imagine that you were shopping for a house and you're looking at a housing market and the comps in the neighborhoods that you're looking at were 350 to 400. And that's fine. You're looking, you're buying in that range. All of a sudden, a house in that neighborhood sells for 750,000. So all the comps were 350, 400, and now something sells for 700,000. So what is going on? It could be that there's a shift in the perception of value in the market, or it could just be it's an anomaly. So what would tell you that something was shifting? Well, if the next 3 houses sold at the 650 to 700 mark, then that would tell you that the perception of value is shifting and that the price, the value of the market is increasing. Now, if the next 3 houses sell back at the 350 to 400, something was up, and that higher price was actually rejected. What you find was somebody just wanted that house and they didn't care how much they paid for it. So we would reject that price. We would say that price is not something that we could lean against. So what this tool does is this looks at a time frame. So this is, for example, this is 1 week, and this is profiling a specific week. And this is telling me some really key information, as in, where have we accepted a lot of price in the week? Where have we rejected it? So if we have these low areas, that's a rejection. And if we have a high area, that's an acceptance. And then especially this red line right here, that is the fairest price of the week. That means we did more volume at that price than any other price in that week. Now that's interesting because it adds context to some of these other prices. So say, for example, we had this awesome move here from 46.59 up to 46.85, but was there any volume around it? No. So this is a weak area in this chart. Here we spent so much volume, even though it doesn't look like the candles don't look like they do much, but we spent so much volume at these prices. This is a very accepted price on that week. Now, that's really helpful because then when we go back out to the larger picture and we look at this whole move from Brexit up till today, we find that you see that the point of control, or this fairest price, continues to migrate higher every week. You know what that's telling me? That's telling me that, like the housing market situation, each house that was sold at a higher price. We were accepting higher value. So even though you look on guys on StockTwits or investing.com or Seeking Alpha or one of these that say, oh my gosh, this market just can't go higher, can't go higher, can't go higher. It actually is trying to go higher, and guess what? It's also accepting higher prices in the profile. Now, where can I make this into even more tradable or actionable information, especially if I go back to my crossover? Okay, so look, I'm could potentially be looking at a crossover over here, but when I look at this spot here, I find that really, unless I can get under this area of acceptance, there's no real movement that can happen. Because what happens is that these larger areas of acceptance where we do a lot of trade, there's behaviors that are consistent that happen there. It tends to slow the trade. And then areas where we haven't done a lot of trade can swiftly move across it. So as I'm looking at this potential crossover, I'm saying, okay, when I look at the profile, I've got some areas that are really interesting. One, I have this area really from 47.66 down to 47.49, that it's kind of a vacuum, which means if we got below this double bottom here at 47.67, we could quickly move across. And then you start going, well, where might we go? Well, we're likely to come right back here and test this fairest price, 47.38. And why is that? Well, the reason that you go back to test a price like that is because this is an auction. What you're looking at is you're looking at a graphical representation of a live continuous auction. And that was something I couldn't believe. That may even be another trading sin, is to not think that what we're looking at when we look at charts is a live continuous auction. When you start thinking about it as an auction, you go, oh wait, there's behaviors that I've seen when I've been in an auction that I know and are consistent. And what profiling allows you to do is it allows you to see how is that auction progressing graphically. It's almost as if you were at a state auction or an art auction and you're actually using graphics to display the behavior. And the more elongated the profile was, like this last week here, the less stable the auction. The more compressed here, where we have a nice round bell curve, what that's telling us is that this auction has a lot of agreement around fair price and value. So this week you would have done well to sell up here and buy down here, and sell up here and buy down here. It's a far better system than just looking at something like a MACD crossover. Now, it's not to say that the MACD crossovers aren't valid. However, it gives context around the trade to add an additional layer of confidence, and that is so key. So as you're looking at markets, as you're looking at your trading system, consider using something like profiling as a way to wrap context around your trading system. Now, profiling doesn't replace a trading system. So if you're using triggers and crossovers and all that, continue to use that, but consider adding profiling as a way to add context around that, so that, for example, if like today, unless we got a break and a close on a 2-hour candle below this 47.93, this thing is not going down. And you can see we've had a couple dips below and they get bought, a couple dips below and they get bought. So unless you saw a break below that, even if you got a crossover, but we couldn't break below this, guess what? That crossover is not going to work. It's just not going to work. Now, if you see the crossover and we get down here and break below this, then we're likely to go down here and test and rotate back around because we have a very balanced auction this week. And if it, for example, got so far down here that we started to get into this area of rejection where we haven't done a lot of business, guess what? It can press even further than what the crossover might suggest. So continue to use your systems, continue to refine your entries, define your risk, but consider using profiling as a way to wrap that around. If you don't, that is a big sin in trading. So don't buy into the sin of having a trading system that you just follow blindly. Wrap context around that. Use profiling as a way to see the auction in real time, and you'll be absolutely ecstatic that you did.